Doing well today. It is Thursday, the 29th of July, and I think I'm gonna put a hat on. My hair's kind of crazy. Anyway, 29th of July, and we're just here to do a really quick update, let you know what's going on, what we did yesterday, what the opportunities were then, and what the opportunities are now. So we're gonna go ahead and let's get right into it. Yesterday we did have the FOMC meeting. The minutes came out, and then we had obviously the press conference. Brain wasn't working for that. Following that, we said yesterday that the markets probably would have a tendency to be fairly flat before and leading up to that announcement. Said it's a great time to stay away and just wait for the market to find some footing. We also talked about key levels to watch and look at beyond the BTX method, look for breakouts of key areas and what those could potentially do for us. So how did things pan out? Well, let's pop over here. Oops, where did my screen go? Let's pop over here and we'll have a look at this. Yesterday, this is leading up into FOMC, and through the day, I think you can all agree it was pretty darn flat. Today, we are on the move. Things are back to, quote, normal without any big major news hanging over our heads, and the market's now making some movements. So for the S&P here, what we're looking at and looking for is long trading opportunities. The S&P has a long bias in the 4-hour. The blues over the what color is that? Orange-ish, yellow. And on the 30-minute, the green is over the red. So that's telling us we have a confirmed bias in the long direction. So we'd be looking for buying opportunities. Now, we don't want to get overly excited about this initial push, in the first 10 minutes of the market. And I am doing this a little bit later today. I usually do this earlier in the session, but the regular trading hours are underway now. And as things have opened, we've seen a big push up. But again, we don't get too excited about that. The first bit of the regular trading hours is referred to as the amateur hour. And oftentimes you see these big moves followed by retracements and then followed by the actual true movement and nature of the market following that. So we don't really start. All of my indicators are set to begin at 9:30 my time, which is 10:30 Eastern time, so an hour after the market starts, because I'm really not too interested in the whip that often happens during this time of day. So anyway, what are we looking for? We're looking for the market to push up and then begin pulling back. So we'd like to see the market pull back, making lower highs and lower lows, and then that'll give us an opportunity to play a breakout of the previously closed lower high and look to go in the direction of that current market trend, which is long. Now, let's say this does start pulling back, and it starts pulling back pretty heavy, and we get down here to this 43.80 area. If we break down and close below 43.80, I would say, shut things down. Don't even keep looking for longs at that point, because that would be the indication that the market's starting to roll over. We've seen pretty heavy support down here at this 43.80, 43.85 area, and that's a pretty major level of support. And if it does break that, again, it could be the potential. Doesn't mean it is, and doesn't mean it will, because there's no definitives when it comes to trading. There's nothing that's occurring right now or 10 minutes from now that absolutely 100% means something is going to happen. But there's a high likelihood that if we break below this 43.80 and close below it, that we'll see this roll over and could continue further down. But for right now, we are looking at longs, so we want to see the market pull back a bit. A healthy pullback would be back to the 43.90, 43.92, and then break back in the direction of the current market trend. That's what we'd like to see. But anyway, we'll see if that actually happens. But let the market do the talking. Let the market, do what it's going to do, and don't try to front run it or guess or forecast. Telegraph your trade. Let the market do what it's going to do, and then park your trades, pending orders. Let the market come to you and move from there. Crude yesterday, we had it did do some breaks here, but again, we mentioned we don't want to be in the market leading up to FOMC because of the whip nature. But if you did take it, you took it. Nothing wrong with having a plan and sticking to it. Even with this small loss that you'd have taken with that yesterday, you're still up for the month trading the basket of trades. So no big deal. We'll talk about what that looks like tomorrow when we do the full monthly market review. But anyway, for what it is, this the crude is in an upward trend. We're looking for long trading opportunities, 4 hours long, 30 minutes long. So we'd like to see it pull back like it was this morning, so making lower highs and lower lows. We'd like to see it keep pulling back a little bit for us, and then we play the breakout in the direction of that previously closed lower high. So if it does break back out in the direction of that trend, we'd like to do it on a breakout of a previously closed lower high. So we'd like to see this pull back a little bit and see where it goes. That 72.30 would be a good area for us. We mentioned last couple of days, the channel this has been in with the top around 72.30 and the bottom down here around 71.50. So just looking at straight breakouts, that 71.30 was hit, it broke it, come back, retested it a couple of times here, now it's continued on. So proven to be a solid level for us. So if it does pull back, we'd like to see it pull back, making the lower highs, lower lows, and then if it can push on, great. If it does pull back a lot and it breaks down around this 71.50 area, then that'd be kind of your signal, hey, all bets are off, and maybe sit on your hands and let the market do, figure out its next move at that point. I do think if it gets down to the 71.50, we would have seen moving average cross anyway, which would invalidate any long signals at that point. But if for some reason there was a big, like a heavy volatile move that drove it down there, just keep in mind if it broke and closed below that 71.50, you'd want to stay out of the market, even if your moving averages were still leading to give you that longer trend, right? Gold, same here. We're looking for long trading opportunities now. It's flipped over long on the 4 hour, long on the 30 minute. So we'd like to see a pullback to get us into this a little bit better. We mentioned 1810. We've talked about that for a few days now, that gold was in a channel here with 1810 being that top, and we'd want to look at long trading opportunities. As it broke 1810, we can see it pretty much gapped right through it, and it has moved on from there. So, definitely some opportunities in gold, but we'd like to see it, now pull back to give us a little better entry point if you didn't take it on the breakout. For looking at 1810 is that breakout that we've talked about for a few days, breaking out of that channel there. So if you didn't take it on a breakout and you're just trading straight on the BTX method, just let the system work. Wait for the market to come to you. Don't get antsy. Don't get overly anxious to force some sort of a trade to happen. Let the market work itself out, which means we'd like to see lower highs and lower lows on a pullback, and then play the breakout of a previously closed lower high. All right, so that's it, guys. It's pretty darn simple. Again, trading the basket of trades, even if you didn't just sit on your hands yesterday through FOMC and you got caught up in the chop that was happening through the middle of the day yesterday, even in doing that, you're still positive for the month trading the basket of trades, and we'll review that tomorrow to go through what the the full trading spectrum looked like for crude, gold, and S&P. Trading just the BTX method without any additional breakouts or bounces or in any other trades at all, right? So anyway, that's it for me. I'm going to leave it here, let you guys get back to your day.